Thursday, March 27th, almost the end of the month. Tuesday will be April Fool's Day. Market analysis. I'm Stan Ehrlich, and we always cover the stock market indexes first and then futures. And I'm still looking at two other stocks at the end here that I will continue to watch for a while. I've been talking about this double and triple top in the stock market indexes for most of the indexes, not the Russell, for the last several weeks. I'm sure it's been at least a month. Now, that downside objective for the various indexes, and I mean SPY and the E-mini, basically the same. There are some minor differences. The YM, the Dow, and the QQQ and the NQ, the NASDAQ, not the Russell. It's a different kind of market, doesn't act the same. All of the other indexes I mentioned besides the Russell have this double or triple top. They've all broken out to the downside. They all went down significantly, relatively close to the downside objective. It didn't quite get there. That terminates on March 13th. Since then, which is only a couple of weeks ago, the market had gotten oversold. In some cases, like this one, tested a support area, not every one of them, and rallied for approximately a week and a half until basically Friday last week or Monday this week. Yeah, Monday this week. And Tuesday, we had a little bit more strength in a resistance area, but it didn't get overbought in the indexes, all of them. So all I had to work with was resistance areas, and it stopped the rally, which came down quite a bit yesterday. Hang on. And started to get down to a gap on all of the indexes I just talked to you about. SPY, ES, the Dow, YM, QQQ, NQ, all gapped up from last Friday's high to Monday's low. Now that gap and gaps in general on daily data charts, they are usually almost always closed, and I describe it, the market movement, as it's kind of like a black hole in space, the gap, and it sucks the price action back into the gap to close trade in the price range that the gap was. And that's exactly what we did this morning on the E-mini, including, of course, last night, 23-hour market, only closed 1 hour. Came down, and we'll see the detail in a moment, almost exactly, just a little bit more than necessary, but closing the gap it's not a strict, exact, specific tick. Now, it's true, there is a tick where the gap is closed, but markets sometimes come down very close to doing the job completely, pardon my cough, and turn around and don't quite close 100% of the gap. Sometimes they'll come down or up one way or the other. It could be a gap above the market and close the gap and keep going, and they don't stop. This one is right out of a textbook. Came down, closed the gap just by a few more extra ticks, and turned around with a vengeance and rallied. 1 minute chart. Here it is. And that was minute by minute, 6:44 California time, 15 minutes after the regular session opening at 6:30. It started to drop very quickly, closed the gap, and turned around and made new highs for the whole session. Wow, that was a pretty damn good, strong move. Well, come on, machine. There we go. So then it gave up the ghost and dropped down. Rallied, couldn't make so far a new high. Dropped down a little bit more, but it doesn't really need to. The gap is closed. The gap is closed 15 minutes after the opening. So that's come and gone, not a factor anymore. What's next? Well, we never got down to our minimum downside objective. That's one significant characteristic of what is still happening now that we're not looking at 1 minute data and the gap doesn't matter anymore. So I do think that whether there's a little more of a bounce that could be up to 57.95-ish, and it could even make a minor new high above 58.35. But I don't think it's going to get higher at this particular point. I don't think we're going to get higher than 58.60. That's the original downside breakout. So there's resistance area, there's previous highs, and there's another resistance level. Three different reasons to think the market could top out somewhere around 58.36 up to 58.58, give or take a little. And I'm not even sure it's going to get that high again. Not for a long time, months. So fiddle around, start to make new lows. That's exactly what I think is going to happen. And we're going to keep going down. So the next level support is 56.52. A bunch of little lows here just recently. Then, of course, you've got the significant support area down here that we already bounced off of a few weeks ago. And that's 55.66-ish, give or take a couple points. But finally, we could get down to 5,500 to reach the minimum downside objective from the sizable top formation, which started in the early December and finally finished forming in middle of February. 2.5, 3.5 months. Not bad. I've seen much bigger, but I've also seen a lot smaller. So a couple of 3-4 months is, pretty decent trading range as far as the time is concerned. So that's the overpowering situation, I think, at the moment, a little bit of a bearish one. So I am not too much more bearish for any of these indexes. Same thing has happened to the spider. It actually tested the original breakout very accurately yesterday and the day before. Came down and closed the gap this morning. I think there's actually maybe 5 ticks left. Yep, 5 ticks. So the gap is 99% closed. So I think it's still going to, hit new lows, and this time it's not going to bounce very much. It's going to keep going. But the point is, I saw the gap. I told you it should, which it did, come down and close the gap, and now it's ancient history. So the gap is not a feature of any consequence anymore. So the spider 1-minute chart. Now you're going to go to the QQQ. Its gap is closed also, and everything I just said basically about the E-mini and the SPY goes for the QQQ, except it is in a support area already right now. That lends itself to maybe a little bounce, and if it does bounce, then of course the spider's going to bounce. So I got to think that there's a chance, but I just can't get particularly bullish here. More likely than not, what is this, Thursday? By the middle of next week, we're going to see lows lower than today's lows, and it could be today. And tomorrow, of course. QQQ gap closed at that level, so it did a little extra. But the fact that it came down very fast and reversed even faster is the interesting part about this particular gap closure. Normally, it doesn't do it that fast and that succinctly and accurately. Wow. Boom, close the gap and boom, zoom right back up again. What a wild ride. But it was forecastable, if that's a legitimate word. And I said so in advance. That's the good part. Now, what? Again, I think it's going to make new lows. I'm not sure how quickly. So here we are with the NASDAQ. Gap is closed. We're a little lower on the day right now. Nothing dramatic. The range is not that big either. The important feature of today was the gap closures. Trying to make new lows for a short period of time here. And the only thing left is the low of the day earlier. The YM did not yet close its gap. It's a little bit underneath today's low, which is very close to starting to close the gap. It needs to get down to about 42.34, give or take a little. So it's still got an open gap. Another reason why I think we're going to see lower than higher first. Even if it does go a little bit up, it's going to come down more and finish the job on the YM. And here's the 1 minute. Russell, not the same at all. We're starting to get locked in between a rock and a hard spot. Major resistance starting on the way up at 2145. Major support it just bounced off of a couple of weeks ago at 2000 and a couple of points. 2000 good enough. 2003, 04, something like that. Okay. And bonds. Now, this is later than I would have liked. I thought the bond market was going to have a low on March 14th. Here it is significantly later, March 27th. But now, finally, the price is right. The low today is 115.08. I was talking 15.11 for days and days and days. Also, it's bounced off of it to back up to 15.21, 22. Yeah, 21 at the moment, which is not a lot. And it's not even higher on the day. We're still down a half a point, 16 ticks here, 16:30 seconds. So I really would love to see this thing close above the previous close. And wow, it would be fantastic if it had an outside up day. The only thing wrong about my forecast at this particular point was that I was a little too early in my price. So now not only did I get my price filled, but it's a little late, not too much so, with my time forecast. All of it's done. I don't want any lower lows. Everything looks okay. Just start going up. So if it doesn't, I'm going to start being wrong. I'm going to have to start looking at what it can do on the downside and abandon what is still a good potential large head and shoulder bottom starting in November. And this could be, should be, looks like the last shoulder low today. And we're less than a half a point, 10 ticks or so away from the actual low of the day. So pretty close. Next, 10-year notes. Pretty much the same story. Next, crude. Coming back up some. Doji, around unchanged, a few ticks lower. I still think it could come up some more. But the first objective was reached yesterday, around 70 and small change. There's a lot of lows in here around that same level, a few highs. And so bang, stopped yesterday, pulled back a little more this morning, but not much. And I'm still bullish. So looking for higher. Heating oil, not overbought. Wait a minute. Did crude get overbought? No, it did not get overbought. So a little higher. Also the same thing for heating oil, a little higher. First resistance levels was reached yesterday. Okay. Now the head and shoulder top formation in the natural gas is still working just great. Awfully slowly, but it's working. We have another new low for the move down. And the downside objective should be just a little under 3. And we've already gotten down to 3.7 when everything started going down on the breakout at 4.02. So what is that? I don't know. 1/3 the way down, 25%, something like that. So now it could rally for a day or 2 or 3, but not get above the neckline. It should not get above this neckline. Could rally up to there, but not above the line. Is it turning around? Well, higher on the day at the moment after new lows, kind of looks like it. A little bit of support, not much, don't even have it labeled on the chart. Slim chance, but a chance. If we have an outside up day, then I'd be a little bit more confident that we're going to rally back up to the neckline or close to it, and then turn down to get to its objective. I haven't changed a damn bit. My objective is still 3.0, and all we're doing is arguing about whether it's going to bounce or not and how much, but we know approximately what it should be doing. Next, gold. New high by a squeak. Overbought territory. Again, we are getting very close to my minimum upside objective off of the maximum upside objective off of the pennant formation, because this line represents the staff of the bull move before the pennant started. This objective has already been fulfilled, and it was done February 12th, over a month ago. So that's come and gone. I probably should erase that. Done. So this is what's left, the upside objective, because of the height of the flagpole. or staff. Now, new high. Looks like we're going to have a new high close. I'm only worried about that overbought condition. It's a warning, not a signal to go short, but it's a warning that we probably will have a high soon and probably not too much higher. So a little higher would get to my objective. And if it happened quickly, I would be even more and more and more likely to say it's about to top out. But I wait until it shows me it's doing it. Silver, head and shoulder top, large formation, almost perfect. We are only a day or two before my exact date of the 28th. Yeah, that's tomorrow, Friday. The price is right there at about where I thought the market's going to get up to, maybe even a hair higher. We're high and last and almost overbought, so I think we're very, very close to a top. Now, it might end up being a double top formation instead of a shoulder. The downside objective is approximately the same anyway. Then you would measure from this low here on December 19th up to the average price of the two highs, which I think might get a little higher. Or you could use the current one. It doesn't really matter if you think this is a double top. I think it's a shoulder. The timing is right. The price level is a little bit tiny, a little higher than I thought, but it certainly is in the ballpark. Watch for this market to start to go down. Gold's overbought. I was talking going down, which it hasn't started for either one of these. They're going to start together. Platinum has an outside up day, bullish engulfing, not oversold, no ER buy signal, but an outside up day implies a rally. Don't know how much. Probably resistance is a good tool to use. 1030. That's my objective. Maybe only taking a day or two to get there. Next, copper did stop right around that previous top I talked about yesterday before it happened. That's a resistance level on 520 of 24. We reached the high of the market, overbought conditions. This horizontal line is exactly at the same price. We got just a little tiny bit higher than the one many months earlier, almost a year earlier, and crashed during the day yesterday to close almost at the low. Yeah, it was a little higher net change, but now nowhere near as strong as earlier. And today, kaboom. Almost new lows for 3 previous days. Almost, not quite. And it is a fairly substantial break. Look at the difference between yesterday's high and what we have for today's low so far. That is a pretty swift move in 24 hours. I think we've started. I'm looking for a move down to 4.9, maybe lower. Grain. Now a little salvation as far as my long-term bottom story is concerned, but not across all of the grains at the moment. Beans have rallied sharply. They made a new high for the last 3 days, almost for 6 days. All it has to do is gain a little bit more ground, and it's right up there at the high of the day right now. So it could happen in the next few minutes. That would be, did it just happen? It could have just happened. The high is now 17, and that high was 21 and 3/4 and 21 and 3/4. So I need 22 to make a new high for 2 weeks. Not too far away a nickel. Could do it. I'm liking what I'm seeing. Soybean oil. Wow. Huge rally into resistance area and through most of it in 1 day. My minimum upside objective, if it was going to bottom out, has already been reached in a single day. And that would be 44.50-ish against these lows over here. Plus, of course, you could use the top of the resistance area at 44.66-ish. If we can get above 66, 44.66, my next area to stop at would be approximately 47.50 to maybe 48.50. I'm liking what I'm seeing. This could develop into something really big, really long-term, especially if we start closing above 48.60. Then I'm going to be screaming bloody murder, long-term bottom, 1 year in size, very big upside objective all the way up to 61.86, hopefully. It was it's probably going to be breaking the neckline or this bullish resistance line. I'm not sure I want to call it a neckline, but I did talk about February of 24, a shoulder, and it's got a double shoulder. May of 24, bottom August of 24, inside first shoulder, bullish engulfing ER buy signal 1223, December 24, and now lately involving a bullish engulfing ER buy signal around the middle of March, early March. The exact date would have been the 13th. And now we have the highest high for the month. That's great. So I think I'm going to start calling it a double shoulder head and shoulder bottom. This neckline would be just fine. Let's just keep on going. What about meal? Not happening. Meal made a lower low almost for the whole damn trend, not quite, but it is higher than yesterday's close and could have a bullish engulfing, I hope. Then I'd be a lot more optimistic that this is going to be a little support area that I would have to be watching very closely. And we probably would have saved the day and maybe begun something very bullish, because look what's happening to beans and oil. So meal could be starting something bullish. I just don't have the proper tools to tell you, like in oil and beans. Now, corn, lower on the day by 2 3/4. New low since about the beginning of the month, March 5th. Almost a new low for many months if it goes down below 442, and we're 448, still lower on the day. So this is not turning around yet. Is and did make a bit of a lower low, not quite for multiple months, but for the last 2 or 3 weeks. And that is not heading in the right direction at this point. It has to turn if I'm going to be increasingly more bullishly optimistic. Next, we killed it. We're at a new low for years in wheat. Today's low is a new low ever since the war started over 3 years ago, when it had a blow off top of the double limit move, limit up to limit down. And that produced an ER sell signal, red, one of the biggest, hugest signals that was the most profitable, although extremely gutsy, signal that I've seen in, I'm going to say, years. It's just huge. So here we are, new lows for the whole bear market. I have to have a turnaround. I've got to have what I hope to be a bullish engulfing green day. Sooner the better. Otherwise, I've got to say this is not holding, no evidence of turn, only an oversold condition, which could stay oversold for days and days and make lower lows. So I got to start turning watchful for a bullish turn in wheat, but expecting it to chew into somewhat new lows in the meantime. Next, higher high in cattle, not quite. Disappointing to see the rally today being so big. We did have a bearish engulfing, and it's still the high of the move on March 21. But this is the highest since then. I've got to have it turn around and come down a lot. It is overbought. It does have an outside trading range, but currently bullish engulfing, not bearish. If it were to simply close below yesterday's closing price, dropped over 108, now over 110.9, then it would turn instantaneously red, and I would have 2 sell signals on the 2 highest highs for this move up, but it is not turning around yet. So I don't have that yet. Next, hogs, sideways, no comment, doji, resistance, probably looking for a turn down, but I can't tell. There's a big sideways blob of nothing for the moment, sort of like a pennant maybe, not helping me much. Okay, Shell. Outside trading range day today. Today's low is a little tiny bit lower at 72.69 than yesterday's low, which is 72.70. So we're 1 penny today below yesterday's low. That means it's lower. We're obviously higher than yesterday's high, so there's the outside trading range or an engulfing. currently up 66 cents. But if it closes below yesterday's close, I would immediately have a major sell signal. Very overbought conditions, a divergence, new high in price, but not yet a new high in the indicator, and a sell signal that would be read my ER sell signal, but it's not doing it yet. Don't jump the gun. I have to wait for a sell signal. Otherwise, I got to say it could work higher. An outside up day is normally bullish. Next, Apple. Coming up a little. Got a real good signal on the 21st. Close to the recent highs. No lower lows. A little support held around yesterday's low. Higher by $1.76. I like what I see. I think it's going to make new highs pretty quickly. There's an old saying, the way Apple goes, the market goes. So if I'm friendly to Apple, that implies I should be bullish on the stock indexes in general. I don't necessarily believe that old saying. I suspect that it's true on a longer term, but not necessarily day-to-day basis. All right, back to the E-mini. I think it's climbing just a little bit. Yeah, no lower lows, bouncing around here. You guys have a great day and profitable trading to you.